Mr. Grant Bledsoe, how are you?
I'm doing well. I'm doing well. Thanks for having me on the show.
Yeah, well, I was on your show a little while ago and I thought, wow, that was a good conversation. So I should have you over here and spread the wisdom.
We had a great conversation. You
Yeah.
have, I think you have a few more years on me, perhaps, not to start us off at a bad note, but
Whoa,
you
wow.
you have more wisdom than me, and I appreciated having you on. It was a pleasure talking for an hour or so on my show.
Yeah. Well, here we are. We are talking to a group of forward facing contractors, business owners in all types of construction trades all around the world. And they know I'm going to ask you this question, Grant. Who the heck are you? And how is it that you come to be speaking to all these people?
I appreciate the candor. So I am a financial planner.
Mm,
And basically the way that I describe what that means is I help people make great decisions with their money, and I help them align their finances, what's going on in their household, with what's going on in their business.
oh,
And
yeah.
a little background about that is I had a Wall Street job for a little while, had a very nice career going, and then started to realize that the way the industry was structured was coincidentally probably not to most people's benefit out there. And so I resigned and started my own firm delivering financial planning more directly to consumers and to business owners. And for those business owners out there, if you compare running a business to what it's like being an everyday W-2 employee, working somewhere where you're given
Yeah.
orders and you're told where and when to be somewhere, and you're paid maybe a certain number of dollars per hour, the world is your oyster when you call the shots. And there is huge opportunity to align what you have going on personally with your
Right.
family and your household with whatever it is that you want to do in your business. And that's
It,
and that's what we do at the firm.
it's the dream, isn't it? I mean, it's one of the reasons people start their own company is freedom. A lot of them were employees before and they decided, you know what, my boss is a lunatic. I'm going to go work for myself. And then, of course, we all become our own lunatic.
That's right. That's right. Yeah, it kind of builds on you after a little while, but there's huge
Yeah.
opportunity there, and I just get huge pleasure out of helping people walk that line and figuring out what it is that they want to do with their family and in their lives and their careers, and tune it all up and put the pieces of the puzzle together with them.
Yeah. Now I know that that's a great story, and I'm glad that you were on Wall Street, so you saw the how that all worked. But when you talk about other construction businesses without giving away any confidences, what kind of trades are they in? What do they look like?
We have a couple different business owners in um, they build homes in the Sacramento.
Right.
So I live in Sacramento, California.
Mm,
In this area, there's a lot of development going on, and so the construction of these model homes in newly developed areas is really common around here, and we've got more than one client who basically does that.
that's right. Yeah.
They've got a
It's
team of 5 to 20, and they just build a bunch of homes during construction season.
you are speaking to exactly the right audience because the people that are listening to the show are either those people themselves or they are subcontractors who work for those people. And so finding wise ways to make your money work for you is it's one of the things I love to bring people education about because once we get the business running well, then we start to get profitable. Once you have profits and you've bought your Sea-Doo and you bought the truck, you kind of look around, you're like, well, what am I going to do with it now? And that's when you enter the picture.
Yeah, it's fun. It's fun once you start to check a couple of those initial boxes and you still have a little bit of cash left over. Well, what do I do with it now? Well, then we can start brainstorming and really secure things down the road. And that's just really important because even if you love what you do every single day, our ability to do that job to our fullest capacity is going to wane at some point as we get older. And it's important to make sure they don't have to be pounding rocks every day until you kick over when you're
Yeah.
in the ripe old age group of
Of
80s or 90s.
whatever age you are when you do that. Yeah.
Right.
Yeah. You have to think about the future, right? So here's one of the things that we know happens is we've got taxes to pay. We've got places that we have to put our money, but what you're talking about is optional places for me to put my money. How does that world look when I've got a lump of cash coming through the business? Where do you fit into that? And obviously people can be anywhere in the world listening to your advice as a financial expert, but what do I do as I've got that money coming in? There's some free cash flow there. What are my options and choices and what's a smart way to deal with it?
Yeah, I think that's the $1 million question. And the way that I would describe it is the experience for most business owners when you're first going through this cycle is you put yourself out there in this new business. It's really scary. Then you start to win some jobs and you get
Yeah.
some revenue in the door and things are going well and you're paying your business and you've got the lease on the new truck or whatever it is and you're doing okay. And then you get to the end of the year and you file your taxes and you get this big fat love letter from the IRS that says,
Love letter.
here's your bill. And it's just totally, it broadsides a lot of people because they hadn't prepared for it. They hadn't planned for it. And the alternative to that and the approach that we use here at the firm and what I'm suggesting anybody who goes through this and has experience with this utilizes is engineer it in the first place. Identify what it is you're trying to do in the business, what you're trying to do at home, and then create a plan where you know exactly what to expect. Because if you go at it blindly year to year because you're not totally sure how the business is going to do, you're not totally sure what you're going to owe, it just never ends up well. And even if you don't have total confidence as far as how the business year is going to go for you, how many homes you're going to sell or whatever it is, starting with the end in mind, putting some foundations in place over this is what I truly want to do, that's when the options and the specifics for what can I do to reduce my tax bill, totally legal options that we can go over if you like, that's when those become visible. You don't really see them if you don't have that foundation and that path in place first.
That's right. Yeah. And I think you nailed it when you said, you start the business, you're not sure if the thing's going to even fly. So why would I put a financial plan in place? But it's that calm and measured approach to business. The same thing that I talk about when I talk about measuring things in the company, having an end of job report, tracking our profitability, having a dashboard, which for a lot of people doesn't sound interesting or sexy or anything. It sounds complicated. It sounds like more numbers. And yeah, it is. Now we can make it more exciting, and it's way more exciting when you have buckets of cash at the end to go play with. But that's the cost. That's the investment I have to make as an owner, is figuring out what to do with my money as it comes in. So let me dial it back here for a second, because you're an expert on this kind of thing. How soon in my business's what do you call it? Like if I've got a 1-year-old business or a 5-year-old business, how soon in my business's lifespan should I be starting to think like this?
Well, I would say from day one, and it doesn't. You don't have to be employing any of these complicated tactics or maneuvers that we can cover if you like. But really, from day one, go into it with the idea that if you have money coming in, let's say that you make $10,000 a month, you have $5,000 worth of expenses that month.
Right.
That means that you have $5,000 left over that you're going to be taxed on. And here in the U.S., when you have self-employment income, you're expected to make quarterly estimated payments toward your tax bill for the year.
Right.
So even if it's a brand new business, just keeping track of your books on a month-to-month or quarter-to-quarter basis, know how much you can loosely ballpark it, and then send a check off to the IRS so you don't fall behind and wind up paying a penalty at the end of the year. That's the most basic thing. From there, it gets a little bit, you can add layers and it gets a little more complex every subsequent year that the business does better and you build this routine and this financial reporting cycle within the business.
Yeah. Well, I'm a big fan of sending the government a check no matter what, because I'm going to owe them something. And I want to have that in their hands so that whatever the difference is, then I can just make up the difference. And I'm not surprised, a $7,000 bill that I've already paid $5,000 on, it's now just a $2,000 haircut that I'm worried about instead of coming up with $7,000 out of nowhere. I totally made those numbers up. You know that, right?
Yeah, right.
You're like, Dom, if that's all the taxes you're paying, you don't have enough problems yet.
and to be totally clear, you will have to make up the difference when it comes out in the wash at the end of the year. So every quarter,
right,
you have your revenue, you have your expenses, you have the amount left over. You're expected to contribute toward your tax bill at the end of the year. Mm-hmm. But if the sum of your payments that you make every quarter are greater than what you actually owe when you file your tax return and report on the year's transactions, then you get a little bit of money back in the form of a refund. And, as much as we don't want to give the government any more money than they deserve, right?
Yeah.
it is absolutely within our rights to plan to minimize the ultimate amount that you will owe. There's nothing wrong. I'm not suggesting that we conceal transactions or doing
No,
anything that's illegal. It's planning within the rules of the law to minimize the ultimate amount that you'll owe.
this
And
is a, sorry, go ahead.
I was just going to add, whether we like it or not, the federal government is our business partner. And if we're prudent stewards of our business, we're going to try to elbow them out as much as we can. That's what prudent operators should be thinking about.
Let me, this is a little bit of a side question, but it lends itself to the whole conversation here. Is it a common characteristic of wealthy, successful people that they have somebody like you in their back corner, like that they're using financial management tools, or are they just going out and making so much money they don't worry about tax?
I think it is absolutely a common characteristic. And if we can depart from construction industry for just a moment, think of it in terms of an attorney who might bill their time at $500 an hour. Well, they can probably do their own financial plan. Any business owner is certainly smart enough to do this on their own. But it takes a lot of time and effort to read through the tax code and understand all of it. I have the benefit of doing this stuff as my day job, as do a lot of other financial planners.
Right.
And so from the attorney's perspective, if they have an hour in their day and they can bill it out at $500 an hour.
Right.
And it costs less than $500 an hour to hire somebody who's a professional that can do it a little bit more efficiently. It's economically beneficial for them to do that. And I think a lot of really wealthy people have figured that out and have teams of professionals, lawyers, accountants, financial planners to help them achieve the vision of what they're trying to do.
Yeah. Now, some people that I've spoken to, thank you, by the way, I completely agree with that. Some people think, look, you're going to get taxed no matter what. There are no tax breaks. There are no tax incentives that are going to work for me. I'm a small company. I'm a small guy. What would you say to that? Are there tax incentives for the smaller business? Are there ways to mitigate taxes while still staying within the boundaries of being a good guy?
Absolutely. Easy example of that is, let's say you make $100,000 in the year, or let's say you have $500,000 of revenue and $400,000 of expenses. You have $100,000 left over. You're going to owe taxes on. Well, there are all sorts of business deductions you might be able to take, and instead of paying tax on $100,000 of income, maybe you're paying tax on $90,000 of income if you can find an extra $10,000 of deductions. That's one real broad example. And sometimes that might mean taking $10,000 of cash and investing it in a retirement account. That's a deductible opportunity, circumstances depending. Maybe it's a piece of equipment, or maybe it's keeping track of your mileage, the amount that you drive around to and from jobs. That's potentially deductible.
Right.
There are tons of opportunities, too many that we could have maybe 3 weeks of daily 60-minute episodes and we might get through a third of them.
There's that many.
There are tons. Yes.
Wow. And so people can take advantage of these almost regardless of the size of business they are.
Yeah, absolutely. Yeah. You don't have to be a huge multi-million-dollar corporation to get some big research and development credit or anything like that. There are lots of opportunities available to small businesses.
Yeah, well, I'm sure including employment credits for all the people that we're hiring and putting back in the community. Now, are there federal programs and state programs, and then maybe even county level programs, or do they restrict it to federal and state?
There could be county level programs too. Obviously, it depends on the zip code. There's and counties operate in many different manners across the country too. So I would probably venture to guess that the biggest bang for your buck stuff is going to be at the federal level, but there are probably state opportunities out there as well.
Yeah, that's crazy. People like stories, Grant. Can you give us a story, obviously confidentiality at the top of the list, of somebody who came to you and said, hey, look, can you look at my stuff? I don't know whether we could work together or not. And then you looked at their total package of information and went, oh my gosh, we've been missing this for a long time. What are some of those observations you made that we can all take away as a story?
Yeah. Here's one that came up recently. And I'll try not to get too technical with the stuff, But basically, as a business owner, came in. They were not in the construction industry; they're in the medical industry, and they own a medical practice that's formed as an S corporation. And I don't know if this will ring a bell or not, but when Trump passed his tax legislation in 2017, it was effective January 1st of 2018. And the piece of legislation was called the Tax Cut and Jobs Act. Part of that piece of legislation was that if you pay state income tax, you can write off that state income tax on your federal return. So if you make $500,000 a year, if you're in California, you might be paying around $50,000 of state taxes.
No kidding.
You get to deduct that on your federal return.
Wow.
But the Tax Cut and Jobs Act limited that deduction to the first 10,000, whereas previously it was unlimited.
Okay.
So it was kind of rough for a lot of blue states, because those are the states that tend to have income taxes in the first place. Well, since 2018, a lot of the blue states around the country have passed their own pieces of legislation to provide workarounds to that deduction. And so to put some numbers to it, if you're paying $50,000 of income tax to the state of California, and you're only allowed to deduct the first 10,000 of it, that's $40,000 of deductions that just goes away. Okay. So 40,000 times, let's call it 32%, if you're in the 32% tax bracket, is somewhere around maybe $13,000-$14,000.
Right.
So you're paying $13,000-$14,000 more than you had to previously. Well, the states have passed these workarounds, and so basically, what the business can do is prepay your state taxes that you expect to owe. That flows through to your personal return at the end of the year, and you get a credit for that amount. So we were able to finagle this because he lived in a state that had one of these exemptions.
Right.
And immediately, by filing a couple things and having a couple conversations with his accountant, saved him $13,000-$14,000 every single year in income tax. So that's one example. And this is a good example. You have to be living in the right state for this to work, right?
But those combinations always exist, because I often hear people say, Don, that won't work for me. It might exactly work for you. It might work better for you. But I would encourage everybody, don't always think, oh, that'll never work for me. You've got to ask the question. You've got to have the discussions, because those are puzzle pieces that guys like you know how to put together based on current situations. And you do it every day, right?
Exactly. Yeah. I mean, none of the stuff is terribly complex, but there's just a lot of information to synthesize. And, I get to do this all the time. So I have a pretty good working knowledge of these types of opportunities.
Yeah. So incredible. Other stories. Tell us something here about a guy who came to you and thought it was all over. And then you're like, no. You're looking at this all wrong. You haven't been doing, well, you've just been paying the tax bill that you've been given, and you're not taking any deductions at all.
Yeah. Another real common one is, and this is, as you know, we invest everything. Our businesses are reflections of ourselves, right? Our businesses are our babies. And it's hard for us to hear that your baby's ugly. If we invest years and decades into our growth and development of our business, when it comes time to walk away, a lot of people that we've spoken with over the years have this expectation that it's going to be really valuable. And almost always they think it's going to be way more valuable than what it actually is worth than
what a buyer is willing to pay. Yeah.
What a buyer is willing to pay. That's right. So we had somebody come in, and they had expected that they're going to retire from what they keep after taxes after selling their business in 5 years. And come to find out, it wasn't even a saleable entity. We had a lot of substantial work to do to work it into a package that a buyer is actually willing to spend money on.
Yeah.
And simultaneously, we improved cash flow, structured a 401k plan for the business. Now he has more employee retention. He has a little bit more savings in a vehicle that's not tied up in his own equity. And every dollar that he puts into the plan is a deductible expense. So by going through these motions, improving the cash flow in the business in a way that allowed him to fund the 401k plan, he's getting a nice tax deduction.
Yeah.
He's now getting something for the business, even if it wasn't what he thought it was worth initially. He's getting something instead of nothing. And part of that is because the employees want to stick around because he's just improved his benefit package by in a big way.
Yeah, from nothing to something.
Yeah, exactly.
Yeah. And finding people's a hard part right now.
Finding people is a big deal right now, for sure.
Yeah. So you mentioned here, this guy was looking to sell. A lot of people listening to this show are not looking to sell today, but they're kind of curious, because I hear from them. They call me or they send me notes or text me and like, I don't want to sell now, but I can't do this forever because in order of appearance, my neck, my shoulders, my back, my hips, my legs, my knees, my fingers, my toes hurt. And I can't do this I can't swing a hammer. I can't turn wrenches. I can't climb ladders forever. So do you get called in to the sale of the business conversation? And when you do, what are the kind of things you help them identify and realize about getting a sale to happen?
Yeah, I would say that our specialty is working with business owners in transition. And so helping them structure that, what are we really trying to do on the personal side? What do you need from a potential sale in order to live with confidence over the rest of your life and get what you need from your resources? And then start to take the steps of bridging those two gaps. There are a lot of specialists in mergers and acquisitions and business sales that have far more expertise than I could ever hope to in that arena. But there are a couple real basic things that I think people need to be cognizant of. One, even if you're not even halfway considering selling what you have, maybe you're halfway curious, maybe you're not. Good business planning happens to be the exact same thing as good exit planning. The same things, the same steps that you're going to want to go through if you're ready to sell your business and bring it to market are the exact same steps that you should probably be thinking about in terms of business planning in general, because it will make your life easier. You'll have a clear vision of where you want to get to, and you'll bridge those two gaps that much faster. So there are a couple of real basic things. Number one, over the years, it's inevitable that you'll have some personal expenses flowing through your business. Right. And we went over a couple examples here a few minutes ago of ways that we can legally pay less in taxes. One real easy way to do that is, if you have a cell phone bill, have the business pay the bill instead of you personally. That's an immediate tax savings to your household. Well, when you get closer and closer and closer to selling your business, what you need to do is start taking those expenses out of your books, even if it means paying a little bit more in tax. Because a buyer who's going to want to come in and take a look at your general ledger and your books and records and get a feel for what the business actually is, they're not going to want to pay for your car lease or your cell phone bill. Or
they're going to put it back in or take it out of the value that they're willing to pay.
Exactly. It's and that step, that restatement of your financial statements, is a nuisance to them. So part of this, taking what you have and packaging it up nice and neat so that a potential buyer is interested, you want to save them that step in the first place. So anything that is a personal expense that a potential buyer is not going to want to continue paying, start taking that stuff out of your business and start cleaning up the books. That's step number one. And that'll take a little while to get there, but it's the only way to arrive at true value.
Yeah.
Right after that, the next step is increasing cash flow, because you have a couple drivers of business value. One of them is the amount of cash flow coming through the business. And I apologize for using jargon, but the technical term is earnings before interest, taxes, depreciation, and amortization, or EBITDA.
EBITDA, yeah.
You have revenue at the top of your profit and loss statement. You have your core operating expenses. Anything that's left over before you pay taxes or depreciation or anything like that, or interest, that's free cash flow in the business. And that's what a buyer is primarily interested in from you. So anything that you can do to increase EBITDA is by default going to increase the value of the business that you'll get in a sale.
Yeah.
It's not always as simple and as straightforward as just boosting top line revenue. That can be a detriment in some circumstances, but that's step number two. After that, businesses are valued based on a multiple of that number, EBITDA.
Mhm.
Usually the range is somewhere between 4.5 to maybe 7.5 times free cash flow or EBITDA.
Mhm.
That's the range. Where you fall in that range is based on a whole bunch of qualitative factors.
Yeah. And buyers know how to do this, right? Oh, this guy
Buyers know
has
how to
his
do
cell
this.
phone bill and Friday night pizza is all still wrapped up in the company. That moves you away from the high number and closer to the lower number of sale, right?
Exactly. And more likely what they would be doing is, if you have, I'm just pulling this out of thin air too, $100,000 of EBITDA, and a lot of that 100,000 is wrapped up in your Friday night pizza and your cell phone bill. Well, they're going to figure that out, and maybe 100,000 becomes 90,000. So you want to get out of that habit in the first place as you begin to approach this path toward a sale.
Yeah.
Now, beyond that, you have intellectual property stuff. How protected is your business? What is what kind of agreements and contracts do you have in place with your customers and clients?
Oh, I
What's the
love those recurring
employee?
revenue contracts. Yeah, those recurring revenue agreements, especially for service companies, are so strong.
Absolutely. And that promise of recurring revenue is what's going to push you toward the higher end of that
Mhm.
multiple. And so another easy thing that people can be thinking about is, when you're selling services via agreement, does that agreement allow for transferability or does it not? Because if it doesn't, you might want to write that into your agreements going forward, because if a buyer can't transfer the stuff the expected revenue you have on the books already, then you're going to fall at the lower end of that multiple range.
Yeah. So
So
crazy.
there's a lot to it, and again, I'm by no means an expert in on the mergers and acquisitions side, but I think the takeaway for your listeners is that good exit planning is good business planning, and vice versa. So just think about all this stuff and how it plays into what you're trying to do personally, because it will absolutely have bearing on your day-to-day and operations of the company.
Yeah. I love it. And the good thing is, on this show, we talk about business planning. When people hear me talk about the one-page strategic plan or the quarterly strategic plan review, that's getting your business thoughts down on paper and saying, here's what we're going to do in the next year. And let's break that down and say, here's what we're going to do this quarter. And then once it becomes those simple, easy steps, it's easy to take those steps. And even if you're only making little steps, you're still making steps forward. And I'll tell you, when a professional buyer comes along, and they are out there, when a professional buyer comes along to buy your company, they know what they're looking for, and they know what they'll pay, and they know what they won't buy. And you certainly want to be on the page of all thumbs up for them to go ahead and buy your company, so you can go relax and drink things out of coconuts and pineapples.
Exactly. And if a strategic buyer comes in and you can show them, this is my 1 year strategic plan, this is how I've boiled that into quarterly rocks or projects or focuses or whatever you want to call it,
Yeah.
that is going to come across very positively. They're going to tell that you're organized, and they're going to have fewer doubts about what's under the hood that they might not be able to see.
Yeah. So we're talking to contractors all across the continent, really. Lots in the United States, lots in Canada, some in Mexico. We've got people obviously overseas. They're going to need some other financial planning for that. But how does somebody pick a financial planner? What do you look for to do this?
Yeah, I think the basic boxes that you want to check, clearly you want to find someone who is competent in the field that you are seeking help in. You want someone who's experienced and educated and probably has a few credentials alongside that. And that's really basic, right? That's ubiquitous no matter where you're at in the world. A couple other things I think are important, and this is the reason that I resigned from a really good job to start this firm. Number one, you want someone who has a fiduciary responsibility to act in your best interests.
What the heck is a fiduciary responsibility? Dom asks.
I know it sounds confusing. All it means is that if you hire this person for help with your finances and they ever do something that benefits themselves before you, you want the capacity to take them to court.
Right.
You want legal recourse. That's all fiduciary means.
Yeah.
And by and large, the financial industry is actually not set up that way. So you want to make absolutely sure that anybody you hire has a fiduciary responsibility to act in your best interests. And you want them to sign something that says that, or it should be in their agreement.
Yeah.
So that's important. You also want, fee structure is clearly important. You want to pay whatever professional you decide to work with a fair and reasonable and transparent price for their services. There are a lot of different ways that advisors are compensated, but I think what you're really looking for is transparency and simplicity. Anything that's too ornate or that you don't understand or that you can't find on an invoice or a statement,
Yeah.
that's bad sign.
Yeah.
You don't want
Hey,
that.
it's the same thing we deal with as contractors when we're talking to homeowners. We say, this is what it's going to cost to build the pool. We're going to dig the hole. We're going to pour the foundation. We're going to tile it. We're going to fill it with water. Oh, that's it? Yeah, that's it. And then that's just an easy agreement to sign, right? You just get it. We're looking for the same thing, I guess, when we hire any professional out there, including you guys.
Yeah. Yeah. That's a great analogy.
Yeah.
Those factors, I think, are ubiquitous, whether you're in Mexico or overseas or anywhere. But the regional nuances might be a little bit different because finance is a highly regulated industry. I think my firm rolls up to 3 or 4 different state and federal regulators, and it's a pretty small and basic firm. So if you're in Mexico or overseas, there are probably additional layers that I'm unfamiliar with. And
Sure.
By the way, if you are abroad and you're looking for some help, particularly if you're an expatriate and live in country A and work in country A, but are a resident of country B, you definitely need someone with special knowledge of the differences in taxation and the ramifications of operating a business in that specific country.
Yeah, bringing your money back. We're talking to you, Belgian crane operators and sour gas well consultants and oil patch hotshot drivers and everything. Because yeah, you're right. That dealing with money cross border, it's a thing.
It's a big thing, and to give everybody some context, it scares the heck out of me as a professional. We don't take on international clients because it requires a lot of very specialized knowledge.
Yeah. We had a gentleman on this show a long time ago. His name is Darren Millard, and he's an accountant who specializes in hockey players who reside in one country but play in another. And the tax implications for where you play, like apparently California, they can't, if they stay overnight, they get taxed a different rate for the game they played based on how much money they make in their total contract. And obviously there's formulas for all that. So they try not to sleep. Like if they play in LA, they try to leave that same night because, there's tax implications. So the stuff that you guys deal with and the stuff you guys juggle is pretty insane.
I feel for the accountants that have to deal with those kinds of details. Most of the stuff that I deal with on my side is a little more applicable across industries, across states, thankfully. Yeah. But man, it does get complex. That's for sure.
If Grant, if somebody wants to find you in this big wide world, ask you more questions and learn about what their financial future looks like, so you can help with it, how do we find you?
We've got a bunch of different places. Our firm's website, the firm is called Three Oaks Wealth. You go to threeoakswealth.com. We have a lot of information there. I have a podcast myself that you joined me on. That's where we met. We had a great conversation there. It's called Grow Money Business. You can Google that, and I think my face will pop up about a couple dozen times. I have a blog that I write on. We post the podcast episodes on. It's called Above the Canopy, abovethecanopy.us, and I'm on LinkedIn too. So any of those places, we've got a lot of content people can kind of sift through.
Fantastic. Well, I'm glad you shared your info today, and this really is an unknown element of running a business that unless you hear about it, like through this show, you wouldn't know. You wouldn't know that when you get given the tax bill, it's not just a sentence, that there's some back and forth that a professional can show you how to deal with. And that problem gets bigger the bigger you get, which is what you want. You want to have more room and more flexibility to do things in an intelligent way, instead of just saying, well, it's the check I got to cut, let's just cut it.
There's huge opportunity to engineer the business and your cash flow and your ultimate tax bill in a way that aligns with your values, your family, your personal life, everything that makes you tick. And that's probably the simplest way that I can put it, because doesn't matter what size of business you are. There are always opportunities.
Yeah. Well, Grant, thank you very much for being on the show. I appreciate it.
Thanks for having me. This is very enjoyable. You have a great show, and I appreciate being on it.
Thank you. Thanks. Talk to you again soon.
Sounds good.
Bye-bye.